In this video, I wanted to talk about the 3 main trading rules that I have. Now, this has allowed me to become profitable, and these are 3 big rules that I always follow every day, and it's essentially the most important thing that I would highlight to anyone. I must always trade with the trend. So everyone always says, trade with the trend, trade with the trend. What does that actually mean, and how do we even know which direction the trend is in? If we look on this chart, I have AMD on the 1 hour time frame. This time frame is where I look at trends and I understand the overall movement of the market. Where is price moving at? Is it clean price action? Is it in any kind of key levels I need to watch for? Right here, I have this blue zone, which is going to be my support resistance area. You can see that price has rejected it in the past. We have rejections here a couple of times. Then up here we have a rejection, and it came back down again. So this is a very strong support resistance. Now, when I am trading, I always identify these areas because that shows me where are the buyers and sellers sitting. If I can understand where these are sitting and where they are in all these levels, that will tell me exactly where price is breaking out of, where is price bouncing from. And when I say trading with the trend, what I'm really watching for is how does price react off these levels, and what do I see with the market structure? These are the 2 things that will really tell me what trend price is going in. When we zoom out on the 1 hour time frame, it really allows us to see direction. So here you can see that it's pretty obvious it's going higher. Price is bullish. Then from here, price is going down, so it's bearish. Then price is going higher, it's bullish, came back down to support, and now it's likely going to go higher. In this case, price is going in a bull trend. Now, when we look at more recent price, we want to see the overall direction. Where has price come to? So I would say in this whole area, price is still bullish. I am still bullish on AMD because price hasn't showed us that it is going down. Even though price is retesting support, it was not able to break support. If we had a true break in this support, that would be a change in the market structure, and that would likely be a change to a bear trend. However, right now we are in a bull trend, and when I'm looking at that, if I can identify that overall price is going higher, if it's retesting levels, that just shows that it is continuously going bullish. And once I understand that price is going bullish, then I know I am going to be bullish on that stock. So from there, I will understand that if I am trading within that day, if I'm day trading or scalping, I will only want to trade in a certain direction. So the 1 hour time frame is very important because once I understand the direction on the 1 hour time frame, then all I have to do is go to a smaller time frame and then look to trade in that direction. So then I already have those biases, and all I have to do is wait for those levels to break or those levels to bounce and only trade in that direction. Other than that, if price does some other weird stuff or it goes to an area where I don't want to take a trade, then all I have to do is sit out of that stock, then look at another ticker that is trading in the area that I want. So right here, we could see that if we zoom in, price had already bounced off this support. So when I say trading with the trend, what I mean is that if price has already come down to support and overall has already been bullish, then right here, I'm only gonna take calls. So if we go to a 5-minute time frame to really understand direction of price, because price has already come to support and is rejecting support, the only direction I want to trade for this day is going to be bullish. So I'm only bullish above this level. Now we can also see that price is going down here. So when I say trading with the trend, if I am only bullish in this area, any kind of puts down, I'm not trading any kind of trend like that. I'm only going to be interested in trading this upward movement. If it's in the opposite direction of the trend that I see, this is an area where I wouldn't trade. So I'm not even looking at AMD at this point. Same thing here. If price is at support, the only thing I'm going to be interested in is calls. So I'm only going to take entries off this support to go higher. And if price ends up pushing down, this is not something I would trade. If we look down here, price is rejecting off support, and we'll talk about entries next, like how do we enter a trade. Over here, you can see that price is overall bearish, but it is as well bouncing off this support. So that's also another thing. Let me cover this whole area. Even though price is overall bullish, and I said that I'm only gonna take calls, sometimes because price is very bullish, we are gonna expect pullbacks. So if I'm expecting a pullback, I am okay trading in that movement down. So I would be okay doing puts even though it's against the overall bigger trend. When I say trading with the trend, it also means trading with the overall bigger picture, and a pullback hasn't happened in a while like this. Price has just broken through resistance. We are going to expect a pullback very soon. So if it continues very vertical, I'm okay taking puts because in the essence of things, I'm really trading a pullback in the bigger upward trend. So this is when I'd be okay taking puts because it is pulling back to support. But over here, if price had just broken resistance, so over here, if we go to like the 5-minute time frame, if price has suddenly broken this resistance, then this day I'm only going to take calls. So any kind of puts I'm not taking because, you know, price has now broken a very strong level. Any kind of puts would be in the opposite direction of this bigger trend, and that would show that if I'm taking puts here, it is way too early to enter on a pullback, and then price is basically faking out of this big level and pushing down. So I do not want to enter on a fake out going down unless price is below this resistance and then we have a rejection, then I would take puts. Here, if we go to this day and cover everything up, if price is overall bullish, which you can see from here, everything is bullish, ended up pulling back here, and then is reaching resistance right there. Now, this is when I would be okay trading at resistance. I would take puts because it is a very strong level right here. So something like that, I would be okay taking puts because that is a rejection off a very strong level. However, outside of that, if there is no strong level, like here, if there's no strong level, maybe we don't see any support resistance in this whole area, in this choppy movement, I'm not going to take puts at all. The only thing I would be interested in is calls. So unless price is at a very strong key level, that's when I will take a rejection. Other than that, if it's not at a key level, I will continuously take calls to go higher. Now, the second trading rule that I have is no confirmation, no trade. What I mean by that is when I'm doing a day trade, I always need a reason to enter. If price just breaks a level and continues higher, I'm not going to enter the trade just yet. I need an actual confirmation where it tells me that price is going to go higher or price is going to go lower, and that is the reason I enter a trade. If there's nothing showing me that it is a safe entry, I will not enter a trade. Even if it trends for the whole day and I miss out on a huge move, that is not always the case. I can't always predict it's going to be a very significant movement, so I'd rather wait for like a pullback, consolidation, a retest to enter a trade, or even a close and hold above a level. If price wicks at it, I just avoided a whole fake out. If we go to the 2-minute, I'm going to show you a reason to enter a trade. So why would I enter a trade and what kind of confirmation would I need? I'm going to go over this day specifically, which is Wednesday, because price was at this very strong support. So if we cover everything up here to make it a little cleaner for us, now we have the overall understanding that price had already traded above this support area. So price had broken, it's now bouncing off this support, and because it is a very strong area of support, what I would be watching for is I am only bullish in this area because I'm expecting a bounce off support. Zooming into this opening movement here, we could already see that price had a very strong movement higher. So it had a very strong rejection and went very bullish. So you want to know, how do we exactly enter in on this bullish movement? Whenever you see a strong push, either high or low, whatever the different scenario is, you always want to see, okay, based on a very strong movement, where did this originate from? We can see that the move originated from this area. So how do we know to enter in this area? And what kind of confirmation could there have been where you would have entered early on in the trend, right at the open, and then just held it till the high of day? Right here, if we zoom in, we can see that price rejected this support, which is also a pre-market low area and a previous day low. So right here, the pre-market low is right there. So I just marked that with a red dotted line. Then you have the previous day low here, which is a red solid line. That just shows me that there's a lot of key levels, low of day, pre-market low, and a very strong support, showing that this is a very strong area of support. The more key levels you have close to each other, that is going to make for a very strong level, and likely when price is at this level, it's going to reject. and it goes with the bigger picture of a big break and retest of the support level. Right here we have a lot of rejections off this support. We have an open, which is this green candle, a very strong candlestick, and a very long wick. Then it comes down, and you can see that low of day is right there. So this is that low of day previously, and you can see that the next two candlesticks were very weak in the area. We have a whole rejection at this area, and price was not able to close and hold below this white line. So that is our first sign that it is very weak in that area. That is just an added confluence of a bounce that may potentially happen off this support. When you see wicks and you don't see candlesticks able to close below the level or even hold, we know that it is a weak level and likely there could be a lot of buying. Another thing we do see is that once price push off this level, because it is a very strong support, price has already pushed higher and broken this 9 EMA. The 9 EMA I have right here, which is an exponential moving average. It just shows you how strong price is. This is another confirmation that price is going to go higher, because as price moves above a 9 EMA, that really shows you a bullish trend. So if price is above it, there's likely a reason for an entry, and then you can enter a trade to go higher. Another confirmation that you would see is on the 5-minute. So I look on the 5-minute as well as the 2-minute for extra confluences. Do I see candlestick patterns? Do I see a very big candlestick? I'm really just looking at the 2-minute time frame and the 5-minute time frame. So right here, we are on the 5-minute, and what you see at this support level, which we saw previously, is that we have a bullish engulfing. Right here, it looks very close. It may not exactly be a bullish engulfing. So a bullish engulfing is when a whole body engulfs the previous body. You could see it's really close to that. It's not entirely an engulfing, but you could see a very strong bullish candle. So this is very strong, push even higher, closed above this red candle, and that's just also another added confirmation that price is going to go higher. So when I say that my second rule is no confirmation, no entry, what I mean by that is there a confirmation that overall picture it goes in that direction of the trend? Is it a break and retest? This is really a break and retest on the bigger picture, break and retest a support. There's a lot of strong levels, support, previous day low, pre-market low. Then you have a rejection at the low of day. Price is not able to break below and hold. It's wicking. Now price is holding above the 9 EMA. So those are the confirmations that I have that price is going to go bullish. So this is what I mean. I see so many confirmations, so many confluences, and because I see all that, I'm going to enter a trade. Now, if this wasn't the case and I don't have all these key levels, maybe up here, I missed this entry and price is already going bullish. Now up here, price is going very high now. We see that price is just continuously going higher and higher, and we don't always know how high it could go. So right here, I don't see any pullbacks. I don't always like to enter when price is very strong vertical up, because when I see this, sometimes it goes higher. When you enter right away, it just pushes down. So something like this is where I wouldn't enter because there is no confirmation of price going higher. It's easy to say now that you can see that price is going higher. You should have entered around here for calls because you could have gotten in on a good entry to go higher, but you don't always have that. And just based on my experience, when I have entered something like this, it isn't always going to go higher. So something like that, no confirmation for me, I don't enter. That is my rule. If there's no confirmation, no confluences, I don't see a reason to enter like this is high probability, then I wouldn't enter a trade. The last trading rule that I have is I do not trade within a choppy market. When price is choppy, which means that price is just really messy, it's just going sideways, there's no directional movement, price is weak, there's no strong breakouts, or you don't see strong movements higher, strong movements lower, that is when you know it is a weak market. And then if you see something like this, this is a weak market. It's choppy. You can see from here, even from the 1 hour time frame, you can see a lot of wicks, very tiny candlesticks, a lot of indecisiveness. There is no really strong support or resistance area. It's just going sideways like that. Even if you look on like a 5-minute time frame, you could see how choppy it really is. Something like that. The whole day it went sideways. This day, it may have had a really good movement, but it just looks sideways like that. Previous day may have had a good move. After that, sideways movement. Same thing here. really choppy movement, some erratic behavior. I think Powell was speaking that day. But overall, something like that, I do not trade. Based on that movement on the 1 hour time frame, I already know that it is very messy. So that's my rule. If I see the messiness on the bigger picture, go to the small time frame. If it's also very messy, this is a ticker where I don't even want to trade. And that's my rule. If it's choppy on a bigger time frame, I'm not even going to look at that ticker. I just go to the next ticker. So maybe SPY is not working out. Let's look at QQQ. Is QQQ messy as well? Does it break above levels? Is it chopping through? It looks like it's messy as well. Very choppy movement going sideways. This is something where I wouldn't trade as well. Whereas AMD on the 1 hour time frame, going back to this, delete everything. Is this a messy movement? No, because we have respect to this support resistance. It's breaking, retesting, and it looks like it's now going bullish. So because price is respecting certain levels, we have break and retest, we have clean movement, market structure, I'm going to trade this. And so this is a stock that I will trade, and that is a rule based on this 1 hour time frame. It looks really good. Then I'll do a deeper dive and do an analysis. So in summary, my 3 main rules: trade with the trend, no confirmation, no entry, and then the last one is don't trade in a choppy market.